What's up, everybody? It's Alex, the day trading champ, and guys, today we're gonna go over exactly what you need to do to make money trading Netflix earnings tomorrow. Now, guys, this is no catch. This is statistical data, and this is actually from my experience on how Netflix trades. So I'll tell you right now before we get into the video, guys. No matter what, if the earnings are good or bad, 88% of the time, Netflix drops for the following 3 days after. Okay, so we're gonna get into some examples now, guys. I'll be honest with you. I'm exhausted putting together all these slides that I usually do. I usually put 12 reactions together to show you guys tons of examples so you have extra confidence. But just hear me out here, guys. I know how this thing trades, okay? And we're just going to go over 4 examples instead of 12 today, okay? So, guys, I promise you by the end of this video, you're going to have a definitive conclusion on exactly how you should trade this thing. And I think every single person watching this video will walk away with some good money in their pockets by the end of tomorrow. So, with that being said, let's get right into it, okay? So, here's the earnings releases for the last 4 years. Now, we're going to go over Q3 October for the last 4 years. So instead of doing all 12 earnings reports, we're just going to go over Q3 for the last 4 years. Okay, so 2019, you can see here, we beat earnings, then we drop 45 points. Okay, so here's the earnings. Netflix always releases earnings after market. Okay, so what you'll see here the next day, they gap up. Okay, and your best entry is puts at the open or on the bounce. Okay, you can see it bounces slightly about 5 points before it drops off for the next 3 days. Okay, so from top to bottom, guys, 50-point move. Okay, and this is all going to make sense. Just give me a sense. Give me a second, guys. Like, I'll show you everything you need to know. Okay, so Netflix, October 2018, guys, beats earnings, still drops 50 points within the next few days. So, guys, are you starting to notice here that it doesn't matter if the earnings are good or bad, this stock drops most of the time? Okay, so this is only the second example. Once again, your best entries puts at the open or on the bounce. Okay, so it opens here. You want puts right away or on this slight little bounce to 380. Okay, next example, Netflix, October 2017. Guys, this example, they actually missed EPS and they beat revenue. What does that actually have to do with right now? Well, if you take a look, guys, today, Netflix actually misses EPS and beats revenue. Why did I say revenue so weird? Okay, so you'll see the example here. They release aftermarket on the 16th, okay, and then what do? They gap down, which is exactly what we have here. Okay, so we gap down 30 points. Now here, the stock's only trading at 200. Okay, so obviously you're not going to see some magnificent gap down here. Nonetheless, it is a gap down, okay. And you have to realize that this is still not as significant of an example as what we have today in the current conditions of Netflix. But like I said, give me a sec. I'm going to explain this all so it makes sense. But what was the strategy on the time where they missed EPS and beat revenue? Why do I keep saying revenue so weirdly? Jesus, guys, I'm sorry. But puts at the bounce. Okay, so you'll see here it opens lower, it gaps down lower, and then what? Bounces up, puts on that bounce, you hold it for the next 3 days, boom, you make 8 points. So very small trading range there. Typically, Netflix has a daily trading range of 32 post earnings, and that's including the pre-market or aftermarket drop. So now you'll notice we already dropped 30 points. So now you're thinking, oh, well, the bulk of the move is done. Well, then you have to realize that actually within 3 days after, the average range is 50. Okay, so we still got 50 points on the bone, and I'll show you that on the broader chart here, on the chart that actually has to do with today, but that's going to be closer to the end of these slides. So like I said, just give me a sec. This is all going to make sense by the end of it. Okay, so Netflix, October 2016, guys, this is the one example where the stock doesn't drop. But let me tell you what's so significant about this example is they actually beat EPS by 100%. So their EPS was actually 12 cents instead of 6 cents. Guys, that's a 100% increase in EPS. That's ridiculous. Now, I know 6 to 12 cents doesn't sound ridiculous, right? But when you're measuring in terms of percentage, that's a 100% gain in EPS. That's ridiculous. Okay, so this one example where it doesn't drop was 4 years ago in October 2016. Okay, so that's the one example we got to show you where this thing actually doesn't drop. Okay, so this thing doesn't have much relevance. Why? Because it gaps up super hard and continues hard. That has nothing to do with the current conditions where we've already gapped down about 30 points. Okay, so that's the one example where it doesn't necessarily match up. Now, guys, today, Netflix, October, I don't know why it says 2016. I should say 2020, guys. short the damn bounce. That's our strategy. Now, guys, you already know if you've been following the channel, we were shorting Netflix last week, okay? Then what do? We got out here, and then we repositioned, guys. We specifically said this. It's in the subreddit, and I think it's on the channel too, okay? So, by the way, if you're not in our subreddit, make sure you go join that because we'll post trades like this, okay? And you could have been shorting Netflix last week. Guys, last week looked like Netflix earnings, okay? We made it look like it was Netflix earnings the way we traded it, okay? So, you can see we're already down 50 points from the top. Now look at the bottom level here for Netflix is going to be 470. Okay, so we still got meat on the bone here. And you'll notice, what did I say before? Okay, the daily trading range the day of earnings is about 30. Okay, and then the daily trading range within 3 days, okay, is 50 points. So that coincides perfectly with what we have here on the chart and what it's done in the recent few months. Okay, so here we gap down 30 points down to 490. What does that leave us? That's a daily trading range of 30 points, okay, down to 490. Now, we said the average daily trading range within 3 days of the stock is 50 points, okay? So now, another 20 points, right? Because this is 30 plus 20, that's 50 points of daily trading range within the 3 days. That would leave us right at 470 at the bottom level. Okay, so I know you guys aren't doing the calculations. I know you guys haven't looked at all these things, and I know you guys probably haven't traded Netflix for the last few years, so you guys probably wouldn't understand that. Okay, so that's why I'm here to give you that information so you can take advantage of it tomorrow. So if we know we have a daily trading range tomorrow of 30, then we shouldn't expect to drop much lower than 490 probably. And that's where shorting the bounce comes in, because we know that this thing will end up lower in the coming days, most likely down to 470. Okay, so if it gets, drops down to 490 by tomorrow morning, which it's already at 495, okay, what you want to do is, if it bounces to 500, short the hell out of that, guys. It's a very easy trade. Like I said, anybody can take it. You can probably tell your grandma the explanation and she'll be able to do it tomorrow. So guys, the conclusion, short the bounce. We have 88% probability to win, and you can hold these for a couple more days. So target price down to 470 within this week, or by Monday of next week, okay? But that does not mean you get the 470 strike puts. I see a lot of beginner traders make this mistake. They don't understand that if you're targeting a move down to 470, you don't want to get the 470 strike. Okay, what you want is delta accumulating on your contract. So basically, the closer to the money you are, the higher delta you're going to have. AKA, I guess a better way to explain it to a beginner is that the closer to the money you are, the more money you're going to be making per dollar that the stock moves. Okay, so that's a very simple way to put it. Now, guys, I pay about $100 a month for this pro membership here, where it actually tells us the earnings. So in case you're interested about the earnings this year, okay, what they did was they actually missed EPS by 50 cents, okay, and then they beat sales just barely. Okay, so what I will say about the sales is it's 20%, 22% better since last year. Okay, so obviously that makes sense, guys. We have coronavirus here, and I don't think that's a surprise to anyone. Okay, obviously this is the peak, guys. Netflix will never have more memberships in the history of its stock probably until maybe we have like 10 billion people on Earth. Then maybe it has a chance. But guys, you have to realize this is the peak for Netflix. Okay, and Netflix is a growth stock. Okay, and at this point, it's not going to be growing anymore. Okay, so future guidance is not going to be great at this point. Okay, and there's just, okay, tell me truly and honestly, do you think Netflix is going to have more memberships next year than they do now? The answer is very simple. No, coronavirus is going to be over. It's going to cut off a ton of their memberships, and that's actually going to lead to a downfall in the stock in the coming year, most likely. Okay. Now, that's speculative, okay, and that's not statistical necessarily, although we are implying a prediction for the statistics on the future guidance of the stock, okay, but that is not official, okay, so don't take my word on that, all right, but what I will say is that our conclusion ultimately makes sense, okay, and out of the last 3 years, this thing drops 88% of the time, okay, so if you want to go back and look at all the charts yourself, you can, okay, but that's going to take you a long ass time, and that's why I think that through this video, basically what we've went over, I think you get the conclusion. All right, so now let's readdress that topic of Alex. It's already dropped 30 points. Exactly, but we have a daily trading range of 30 points. Okay, so as it gets 25 points of it away from where it left off, then you got 5 points to the downside. Now realize we left off at yeah, 525. Okay, so this is about 30 points already. So any bounce, you want to short it down, and then you know it has a very high probability for continuation as shown in the slides. Okay, so October, it always drops almost, besides the one exception of 2016, as you can see here. But you can see bearish continuation here in 2017, bearish continuation here in 2018, bearish continuation here in 2019, and it'll be the same here this year. Now, take a look at the chart. Triple top here. Now, what happened last time? In July, we reported earnings here, actually. What happens to the stock when it releases earnings? Gaps up, drops, okay? Now, guys, at this point, coronavirus is pretty much the same as it was back in July. Cases are ramping up a little, right, or whatever. But the point is, okay, at this point, you definitely know that Netflix does not have increased number of sales or members. Okay, so at this point here, okay, when you see we're at the exact same level as last year, the stock drops. Okay, so it's not like we've grown in Netflix or anything, guys. The conditions are pretty much the exact same, and that's why this trade's a no-brainer. Okay, so you can see here, the stock drops on the day of earnings. Okay, and then what happens? Drops again, gaps down significantly. Okay, and what happens? You have a little bounce here, but overall, if you take the next 3 days into consideration, you can tell we will drop much lower. Now, every single top here, you drop down to 470. Okay, so guys, it's a very easy trade. I hope the way I explained it makes sense, guys. And like I said, the strategy going in tomorrow, short the bounce. Guys, these are some of the most bearish conditions I've ever seen. All right, bearish conditions like this come around, probably once every 4 years, like at this election time. Okay, this is absolutely ridiculous. Okay, and honestly, for most stocks, you should be shorting the bounce. Now, let me show you something that you probably didn't think about. Why was Zoom all of a sudden selling off so hard today after reaching its all-time highs yesterday? Think about it. Well, Zoom and Netflix are very strongly correlated. Both are COVID beneficiaries that strive in the conditions we have now. But guess what? Obviously, Zoom knew that Netflix was going to drop after earnings, and that's why Zoom was dropping like a rock today. Okay, so you can see Zoom dropped 40 points before Netflix earnings. Okay, so Zoom might be dropping tomorrow too. That might be the same case of shorting the bounce, but at this point, why trade Zoom when you can just trade Netflix? Okay, so the point I want to get here is that these COVID beneficiaries have been selling off recently in expectation of these bad earnings for Netflix. So look at Peloton, sells off today too. Okay, now it doesn't end much lower for the day, but still that's a sell off. Okay, and then look at let's go over one more. What's another one? Amazon, obviously. Okay, Amazon's been selling off like crazy here. Okay, so you can just tell that all these COVID beneficiaries are at their pretty much all-time highs or like close to their topping levels. Now I know Amazon's all-time high is 3,500, but you have to realize they dumped off after Amazon Prime. And I'm really getting off topic here. I would say this is a bunch of extra information that we didn't really need to go over. Okay, so I'm gonna just cut it there, guys. The point is COVID beneficiaries are tanking here at this point, and I'll actually give you one extra trade. So Snap actually released earnings today, and you can see this thing's up to all-time highs. Okay, now what do we know about things that gap up already being at their all-time highs? Okay, this thing will drop tomorrow, like an 80% probability. Now, what is Facebook doing actually too? Facebook is also spiking up because of that correlation with Snapchat. Okay, so what you can do here now is look at the chart for Facebook, guys. This is one of the most bearish charts I've ever seen. Now, guys, this is a bonus trade, okay? But honestly, if you're a beginner trader, I highly recommend you just trade the Netflix puts tomorrow. Short the bounces, guys. Like I said, your grandma can do it tomorrow. So can you. Okay, so look at this chart on Facebook. You got Head and Shoulders here. Okay, revisit up to that moving average, which doesn't really matter. But you got the bearish cross and the MACD. Now, obviously, that's going to converge to the upside tomorrow after this positive news. But the point is, you're getting close to the double top here. Guys, this thing is just so bearish, all right? You got a double top inside the Head and Shoulders. Everything is bearish here. Guys, I'm making this video way too long. Okay, that's your bonus trade. And if you don't get what I'm saying here, then don't even take the trade. Just focus on this Netflix thing tomorrow, guys. I promise you, everyone can make money. So, strategy here, you can go with the 3 days out for this week, and here, look at the contracts here, guys. This is why we love trading after earnings, okay? So you can see the IV on these contracts. These contracts are going for $6 here for the close to my strike. Now check these as the market opens tomorrow. You'll see these contracts will probably be $2, $3, okay? So that's why we love trading after earnings. So even though there might be less meat on the bone after earnings, first off, you get IV crushed if you don't get a good strike and if you don't get the magnitude of the move you want. And it's somewhat of a gamble because you never know how a stock might possibly react if it's good or bad earnings. You see Netflix has good earnings and still drops sometimes, okay? So that's why it's somewhat of a gamble. Although this was actually a good case for the fact that it dropped 30 points, you could have actually front ran this trade and got puts here. But that's besides the point. What our strategy is actually shorting him after the earnings when IV is over, okay? And that's what I'm saying is you can be getting these contracts for $2. Netflix drops even 5 points tomorrow, guys. You'll see your contracts will double in money over a 5-point drop, or at least 150% return there, okay? So that's the plan, guys. All right, I promise you, anybody can do this tomorrow, okay? And I want to hear your results. I want you to come back to me after this trade goes our way. Now, guys, I sound really cocky. I've said that this trade will go our way, okay? But I'll give you my confidence in this trade. 91% probability we win this trade tomorrow. Now, guys, if we lose with the 91% probability, which, by the way, based on the charts, it's an 88% probability, but this is just my confidence score. 91% probability to win. That's the confidence score I'm giving myself and for us all. Okay, so this is, I've traded this thing for years and I know how it trades. Okay, and trust me when I say I have 91% confidence we win this thing. All right, as long as you time your entry, which it shouldn't be too hard here because there's not going to be too significant of a move to the upside. Now, guys, I don't know how I've been explaining this thing for so long. I guess I just filled with knowledge on how to trade this thing. Okay, so guys, I hope I didn't drag this on too long, but I hope you know how to freaking trade this thing tomorrow, guys. I hope everyone makes some damn money on this thing. And then, guys, if you find the video useful, please just drop a like, subscribe to the channel so you don't miss out on the next trade, guys. I'm Alex, the day trading champ, and I'll see you guys on the next video.